Hey everyone, welcome back to Corporate Decoder. Today Zeo ScientifiX Incorporated just filed an 8K, and I am seeing some interesting options grants that could signal future value. Quick note, this is not financial advice, just my take on public filings for educational purposes. Zeo ScientifiX is granting a significant number of stock options, and we are going to break down who is getting them and what it could mean for the company. So we are looking at Zeo ScientifiX Incorporated, a healthcare and biotechnology company. They have a market cap of about $13 million, and their stock is currently trading around $1.7. They are a small company with only about 20 employees. The filing we are looking at is dated the 10th of June 2026, and it details some important changes within the company, specifically related to stock options. The core of this filing deals with departures of directors or certain officers, the election of directors, the appointment of certain officers, and compensatory arrangements for certain officers. It sounds a bit like legal jargon, but it really boils down to how the company is rewarding its key people. On the 10th of June 2026, Zeo ScientifiX decided to award new stock options as part of their 2021 Incentive Street OC plan. Stock options are essentially the right to buy company stock at a set price in the future. They can be a way to motivate and reward employees and key partners. First off, they granted 625,000 options each to 3 key players. Great Ventures LLC, which is a major shareholder and a consultant, Ian Bothwell, who is the Chief Executive Officer and Chief Financial Officer, and George Shapiro, the Chief Medical Officer. These options are immediately vested, meaning they can be exercised right away. They can be exercised on a cashless basis, which is pretty neat. It means they can use the value of the stock earned from the option to pay for the option itself. These can be exercised for 10 years at $1.67 per S-share. Then they have another batch of options, also 625,000 each for Great Ventures, Ian Bothwell, and George Shapiro. These are called incentive options. The big difference here is that these don't vest immediately. They will fully vest only when certain performance goals are met, like the others. They are exercisable on a cashless basis for 10 years at $1.67 per S-share. What's also interesting is that these incentive options are designed to be anti-dilutive. This means they have protections against future stock issuances that could lessen the value of these options. This is a significant protection for these holders. Finally, Chuck Bretz, who is a non-executive director, received 80,000 options. These are also fully vested and exercisable for 5 years at that same $1.67 strike price. So what does this all mean? We're seeing a lot of options being granted, especially the incentive options that are tied to performance. This signals that the company expects its stock price to go up significantly, and they want to reward those who help make that happen. The price of $1.67 is also quite interesting. Their current stock price is around $1.7, so these options are not deeply in the money right now. This suggests the company and its leadership believe there is substantial room for growth. The sheer volume of options, particularly those tied to performance, indicates a strong push for significant milestones. The fact that 2 of the largest option grants are to Great Ventures LLC, a principal stockholder and consultant, and to the CEO and CMO suggests alignment of interests. Great Ventures is already a major shareholder, so giving them more options that are tied to performance further aligns them with the success of Zeo ScientifiX. For the CEO and CMO, these performance-based options are a big incentive to hit those targets. The anti-dilutive nature of the incentive options is a key protection. It means that if the company issues a lot more stock in the future, say for a new acquisition or funding round, these option holders are protected from a significant loss of value. This is a good sign for them and could encourage them to take on more risk for the company. Now, let's look at this in context. Zeo ScientifiX is in the healthcare and biotech space, which is known for long development cycles and high reward scenarios. They also recently announced an expansion of their medical advisory board and a partnership for stem cell therapy manufacturing. These option grants, especially the performance-based ones, seem to be a way to energize the team and key partners as they push forward with these strategic initiatives. Looking at the numbers, the exercise price of $1.67 is very close to the current trading price. This means that for these options to become truly valuable, the stock price will need to increase substantially. The company is clearly betting on significant future growth. The total number of shares underlying these options is quite large relative to the company's current market cap. This suggests a high degree of potential future dilution if the options are exercised, but the performance hurdles are designed to mitigate that. The risk here is that if those performance milestones aren't met, the incentive options won't vest and that potential upside won't materialize. Also, the 5 Year term for the director's options is shorter than for the executive grants, which is fairly typical. Overall, these options grants signal a strong belief from management and key stakeholders in the future prospects of Zeo ScientifiX. They are essentially placing a bet on substantial growth, and these options are the currency to reward those who make it happen. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord community for more.